When starting a small business, one of the initial decisions involves choosing the appropriate business structure. The most common options are sole proprietorship, limited liability company, often referred to as LLC, and corporation. A sole proprietorship is the simplest structure to establish, often involving minimal setup costs and paperwork. The primary advantage is its ease of formation. However, a significant disadvantage is the lack of liability protection. As a sole proprietor, the business owner is personally liable for all business debts and obligations. This means personal assets are at risk if the business incurs debt or faces lawsuits. An LLC provides more liability protection than a sole proprietorship. It separates the business owner's personal assets from the business's debts and liabilities. This structure combines the simplicity of a sole proprietorship with the liability protection of a corporation. Profits and losses can be passed through to the owner's personal income without being subject to corporate tax rates, which is known as pass-through taxation. Establishing and maintaining an LLC typically involves more administrative work and costs than a sole proprietorship, but offers significant benefits in terms of liability protection. A corporation offers the highest level of liability protection. It is a separate legal entity from its owners, meaning the corporation itself is responsible for its debts and obligations. This structure shields the owner's personal assets from business liabilities. However, corporations are more complex to set up and maintain compared to sole proprietorships and LLC. They often require more extensive record keeping, compliance procedures, and regulatory filings. Corporations are subject to corporate income tax, and profits distributed to owners as dividends may be subject to individual income tax, leading to potential double taxation. Choosing between these structures depends on several factors, including the level of liability protection needed, the complexity of the business operations, and the tax implications. Consulting with legal and financial professionals can help determine the most suitable structure for specific business needs. After establishing a business structure, another crucial aspect is tax handling. Business owners generally have two options: self-preparation and using a certified public accountant, often referred to as CPA, or bookkeeper. Self-preparation involves handling all tax-related tasks, including preparing and filing tax returns. This option is suitable for simple tax situations or when cost is a significant concern. However, it requires a thorough understanding of tax laws and regulations, as well as the ability to keep accurate financial records. Self-preparation can be time-consuming and may increase the risk of errors if tax laws are not fully understood. Using a CPA or bookkeeper provides professional expertise in tax matters. These professionals can assist with tax planning, preparation, and filing, ensuring accuracy and compliance with tax laws. They can also provide valuable insights and advice on tax-saving strategies. While hiring a CPA or bookkeeper typically involves higher costs, it can save time and reduce the risk of errors or penalties. The decision between self-preparation and using a CPA or bookkeeper depends on the complexity of the business's financial situation, the owner's knowledge of tax laws, and the available budget. Businesses with complex financial transactions or those operating in multiple jurisdictions may benefit significantly from professional tax assistance. Another important consideration for businesses that provide services is the applicability of state sales tax. The portion of customer invoices subject to state sales tax depends on the nature of the services provided and the location where those services are performed. Generally, services are classified as either taxable or exempt. Taxable services are subject to sales tax, while exempt services are not. The specific definitions of taxable and exempt services vary by jurisdiction, so it's essential to consult with local tax authorities for guidance. Examples of taxable services often include consulting, marketing, graphic design, and web development. These services are typically subject to sales tax because they are considered to be related to the sale of tangible personal property or are specifically defined as taxable by the state. Examples of exempt services may include medical services, legal services, and educational services. These services are often exempt from sales tax because they are considered essential services or are specifically excluded from taxation by the state. To determine whether a particular service is subject to sales tax, businesses should review the sales tax laws and regulations of the state in which the service is provided. Many states provide detailed information on their websites or through publications. Additionally, businesses can contact their local tax authorities for clarification and guidance. When invoicing customers for services, it is crucial to accurately identify whether the service is taxable or exempt. If the service is taxable, the business must collect sales tax from the customer and remit it to the state. If the service is exempt, no sales tax should be collected. Failure to comply with sales tax laws can result in penalties and interest charges. Therefore, businesses should take the time to understand the sales tax rules in their jurisdiction and ensure that they are properly collecting and remitting sales tax on taxable services. In summary, selecting the appropriate business structure, deciding on tax handling methods, and understanding sales tax applicability are critical decisions for small business owners. Careful consideration of these factors can help businesses operate efficiently, minimize liability, and comply with tax laws. Seeking professional advice from legal, financial, and tax experts can be invaluable in making these decisions and ensuring the long-term success of the business. Regarding the business structure, it is important to weigh the pros and cons of each structure. A sole proprietorship is easy and inexpensive, but it exposes personal assets to business liabilities. An LLC offers a balance between simplicity and liability protection. A corporation provides the greatest liability protection, but is more complex and costly to maintain. Tax handling depends on the owner's expertise and the complexity of the business. Self-preparation can save money, but requires knowledge of tax laws. A CPA or bookkeeper can provide expertise and save time, but at a higher cost. Sales tax depends on the services provided and the jurisdiction. Taxable services are subject to sales tax, while exempt services are not. Local tax authorities can provide guidance. Choosing the right business structure involves thinking about several things. Firstly, consider the level of liability protection needed. If the business has a high risk of lawsuits or significant debt, an LLC or corporation may be preferable. Secondly, think about the complexity of business operations. Sole proprietorships and LLC are simpler to manage than corporations. Thirdly, assess the tax implications of each structure. Pass-through taxation can be advantageous for smaller businesses. Handling taxes effectively is essential for financial health. 1. Consider the complexity of your tax situation. Simple returns may be manageable on your own. 2. Evaluate your knowledge of tax laws. Mistakes can lead to penalties. 3. Weigh the cost versus the time saved by using a professional. Understanding sales tax is crucial for compliance. Firstly, identify whether the service is taxable or exempt in your state. Secondly, consult local tax authorities for clarification. Thirdly, ensure accurate collection and remittance of sales tax. Now let's delve into each option more deeply, starting with business structures. A sole proprietorship is the simplest form of business structure, ideal for single-owner businesses. Its key advantages are ease of setup and minimal paperwork. However, the owner and the business are legally considered one entity. This means the owner is personally liable for all business debts and obligations. This puts personal assets at risk in case of business debts or lawsuits. LLC provide limited liability protection, separating personal assets from business debts. This structure combines the benefits of a sole proprietorship or partnership with the protection of a corporation. Members of an LLC are not personally liable for business debts, which shields their personal assets. There are also options on how the LLC is taxed. It can be taxed as a sole proprietorship, partnership, or corporation, providing flexibility in tax planning. Corporations are more complex than sole proprietorships and LLC. They are separate legal entities, distinct from their owners, offering the highest level of liability protection. The corporation is responsible for its own debts and obligations, protecting the owner's personal assets. Corporations can raise capital more easily through the sale of stock. However, corporations are subject to corporate income tax, and dividends paid to shareholders are also taxed, leading to potential double taxation. Choosing between these structures requires considering the specific needs and circumstances of the business. Factors to consider include the level of liability protection desired, the complexity of the business operations, and the tax implications. Consulting with legal and financial professionals can provide valuable guidance in making this decision. Now, let's move on to tax handling. Self-preparation of taxes involves handling all tax-related tasks internally. It requires a thorough understanding of tax laws and regulations. It also requires accurate record keeping to ensure accurate tax filings. Self-preparation can be cost-effective for simple tax situations. However, it can be time-consuming and increase the risk of errors if tax laws are not fully understood. Hiring a CPA or bookkeeper offers professional expertise in tax matters. They can assist with tax planning, preparation, and filing. They also ensure compliance with tax laws and provide valuable insights on tax-saving strategies. While hiring a professional involves higher costs, it can save time and reduce the risk of errors or penalties. The decision to self-prepare or hire a professional depends on the complexity of the business's financial situation, the owner's knowledge of tax laws, and the available budget. Now let's discuss how sales tax works. Sales tax is a consumption tax imposed on the sale of goods and services. Whether a service is subject to sales tax depends on the specific laws of the state in which the service is provided. Some states have a broad sales tax base, taxing many types of services, while others have a more limited base. Some services are specifically exempt from sales tax by law. These exemptions vary by state but often include services like medical care, legal services, and educational services. To determine whether a particular service is taxable, businesses should consult the sales tax laws and regulations of their state. These resources provide detailed information on which services are subject to sales tax and which are exempt. If a service is taxable, the business must collect sales tax from the customer at the time of sale. The sales tax rate is determined by the state and local jurisdictions. The collected sales tax must then be remitted to the state on a regular basis, typically monthly or quarterly. Accurate record keeping is essential for sales tax compliance. Businesses must keep track of all taxable sales, sales tax collected, and sales tax remitted. Failure to comply with sales tax laws can result in penalties and interest charges. Therefore, businesses should take the time to understand the sales tax rules in their jurisdiction and ensure that they are properly collecting and remitting sales tax. In summary, choosing the right business structure, deciding on tax handling methods, and understanding sales tax applicability are critical decisions for small business owners. Seeking professional advice from legal, financial, and tax experts can be invaluable in making these decisions and ensuring the long-term success of the business.